All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis. We're going to take a look at a few things today. If you're new to the stream, welcome. Let me quickly explain how this works. So first, I'm going to go over the economic calendar. Then I'm going to go over Bitcoin itself. We're going to look at what today's premise is, which is evaluating levels and assigning probabilities. There's an important point that I want to make about this, which I also wrote in my article yesterday. So we're going to go over that. Then we're going to go over the trade of the week, which the trade scanner called and sent out yesterday to everyone on the list. Alex, I hope you got it. All right. So that's what we're going to go over today. Hey, Kai. And we'll get with that. So let's get this thing started, shall we? All right. So first things first. All right. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Next, real quick. If you want to share what city or what country you are from, that's always a fun fact. I am streaming from the greater New York City area, also known as Northern New Jersey. All right, I am simulcasting on TradingView. So if you're watching me on TradingView and you can't see me, make sure to refresh the browser. Again, refresh the browser. People will type in the channel 10 times. Oh, I can't see anything. Refresh the browser. All right, that usually solves the problem. Also, I will answer questions for students. So if you're a student or you're a member of my community, I can answer your questions once I complete the stream. Otherwise, I have to try to keep this stream timely. All right, so let's get this thing going, shall we? Another thing real quick, right, before I get into the economic calendar. The trade of the week email, the link is in the description. It's in my signature. If you're not on the list, sign up. It's free. The trade scanner sends out a signal every week. Now, I want you to understand how it works before you sign up. All right. Each week, the asset class rotates. So this week we had a coin, right? We had Dogecoin. It came out yesterday. Now, next week, we will have a stock. The week after that, it will send out a Forex pair. And then the week after that, it repeats itself again. So you get basically a taste or a sample of each trade. Now, keep in mind, if you don't trade Forex, right, or you don't trade stocks, like I don't care about, this nonsense. I just want whatever. If you want, just coins, that's not going to work that way, right? For the trade of the week, this is an opportunity for you to paper trade the trades that you get, the signals that you get, whether it's a Forex pair or a stock. You can use the TradingView platform. There's a nice simulator in there that you can use, right? And you can put the trades on there. You will learn something from that because the trade scanner takes the same trades for the same reasons every single time. It's a momentum-based system. So it doesn't matter if it's a stock. It doesn't matter if it's Dogecoin. It doesn't matter if it's a Forex pair. It's still the same criteria, right? It's looking for momentum. So I want you to understand that. Now, also, for people on that list, okay, people that sign up for that list, I'm going to send out a coupon because this is a holiday week. I'm going to send out a coupon by Wednesday. All right, you have to be on that list, and you will get more savings on my yearly packages. All right, my yearly packages. Now, my prices are low to begin with for the trade scanner, but right from the start, you save 33% on the yearly. But I will send you a coupon for even greater savings to enjoy all the holiday nonsense that we have over this coming week in this country. So just so you know, if you want the coupon, make sure you're on the list. It's for yearly only. So if you're like a monthly person, then it's not going to matter. You don't have to be on the list. All right. Another thing I want to mention, if my prices are too high for you, you're in the wrong business. All right. I suggest you stop watching my streams, stop trying to trade, and get into like Shopify or something, like Shopify store, because this is the wrong business for you. You need money to make some kind of money in this game. You can't be like, if you're scrapping for like, $50 is a lot of money, you're in the wrong game. I'm just trying to help you out. All right. So enough talk. Let's get going. Oh, by the way, if you want to see results, there's a link in the description as well. All right. We have the results for the trade scanner. It's the results page. There's a link in my signature. Check that. It has all the most current results of the trade scanner performance, which includes trade of the week. Now, keep in mind, some results are red, right? There's no such thing as a 100% win rate system. If my system was all green and everything was green, you should be suspect, because clearly I would be lying to you if I was showing you something that was all green, right? Which some people like to do. Anyway, so check that out, because you'll get a glimpse of reality. All right, enough talk. Let's get into this. First things first is the economic calendar, right? You can use the TradingView one. There are other economic calendars. This week is a holiday week. So on Thursday in the US, we have Thanksgiving. Other countries don't celebrate this, but we do, which means things are going to get very slow going into Thursday. Please keep this in mind in terms of volume. Do you think people want to be in front of their computers on Wednesday? Oh, I'm going to trade the market. No, they're going to be. Wednesday, by the way, in this country, Wednesday night is the biggest going out night in the year, right? The entire world and their cousin goes out on the Wednesday night before Thanksgiving. So please keep in mind, people are going to be thinking about that as soon as Wednesday begins. So if you're a day trader, this is most important. If you day trade on Wednesday, it doesn't matter if it's a Forex pair, futures contract, stock, whatever it is, up until noon, that's it. After that, you're asking for trouble, because volume is just going to go away and you're just going to be basically messing around with algos all day, right? And that's not who you want to trade against. So please keep that in mind. All right. So other economic reports that we have this week, right? Tomorrow is the 21st. And I saw on the calendar that we have the FOMC meeting minutes. That usually comes out at 2 p.m. or 2:30 p.m. I think 2 p.m. Eastern time. And that's important, again, if you day trade stocks, day trade futures, because it can cause an intraday spike. So you want to be aware of that only for that reason. Usually the FOMC meeting minutes don't have much more of an effect than that. Then on Wednesday, we have, there's a bunch of economic data coming from, I saw something from Australia. I saw something from the UK, the Bank of England. None of that stuff is really heavy, in terms of economic news. There's no non-farm payrolls. There's no FOMC meetings. There's no Chairman Powell testimonies. So there's really nothing going on there, right? Then Thursday, I saw a bunch of stuff coming out of Europe and out of Germany. It's the CPI, right? European Union. Germany had their own something going on there. None of that stuff's important. And it's a U.S. holiday. So again, the markets are probably going to be generally quiet. All right. Now, Friday, we have what U.S. PPI, I believe, is coming out, which is scheduled for Friday, which is what, the 24th. So that is usually not a market mover, okay? The CPI report is for the U.S. These other countries with these other CPI numbers, they're not really major market movers. They can affect perhaps your currency pair, but typically they're not global market movers. When I say global market mover, I'm referring to the dollar. They usually don't have a major effect on the dollar. And that's really all we're mostly concerned with, especially if you're involved in things that are affected by the dollar. All right. Oh yeah, so Alex over here on TradingView, thanks. Don't forget to press the like button and the boost button. That always helps, right? And also here on YouTube, press the like button, subscribe if you like my content. I am planning. We're going to have some improvements. Hey, Alex? What happened? You erased your comment? All right. So yeah, please do me a favor, people. Press that. It's always helpful. All right. So I see, like today, my numbers are very low, right? So obviously it's a quiet week. People have gone on vacation, and today is Monday. All right. So hello, Alex and Kai and Dijon. Good to see you all. All right, Peter. Okay, so let's make the chart bigger, and let's talk about this charting situation, shall we? Oh yeah, by the way, Alex, can you do me a favor? Can you share the Dogecoin? Hey, Milad, I'm good. I'm glad you came, Milad. I thought Milad wasn't going to show up today. Can you put the Doge? Oh, it's auto moderated. Oh, interesting, Alex. Interesting. That's interesting. Thanks for letting me know. Alex, can you do me a favor and share the Dogecoin trade from the channel? The trade of the week, which came out yesterday. Can you put the orders in the channel so I can show them here? Because I want to go over that. Once I go over Bitcoin here and we talk about assigning probabilities to levels, then I want to go over that Dogecoin trade idea, okay? Because it's still in play, and we can talk about it. So, all right, cool. So, hey, Edward, how are you? From Lithuania. Okay, cool. Welcome. All right. So let's talk about Bitcoin because that's like the main thing that everyone wants to see anyway. And let me move this over here. Okay. So as you could see in my article that I wrote on TradingView yesterday, I basically highlighted this price action here. Let me make this bigger so you guys can see what's going on here. All right. Hold on a second. That's bigger. All right. You can see that now. Okay, so this is basically what I talked about yesterday. Now, I want to make a few points about this. First, right, the market completely ignored this, right, and is doing its own thing. But the whole point of this, the squiggle, right, the whole point of this, that's not a forecast. That is a probable scenario. That is a look that the market can show us at some point during the week. Trying to forecast the market from this point, which is when I was writing yesterday, the market was here. Okay, you see that? The market was fooling around here when I was writing yesterday. And trying to forecast the market at that point is a fool's game because it's highly random. It's basically a 50-50. It may go higher or lower. It's the midpoint of this structure we have in here, right? So there's no way to know which way the market's going to go. So why do I want to bet on 50-50, right? I want something that's going to offer me a higher probability. So this is where you identify levels, and you also to add more value to just identifying levels. Because sure, you could say, you could say support and resistance. Sure, I know what they are, but the structure has something to do with their probability. That's the structure that's in play. That's a bullish structure, right? It's higher high, basically these little mini higher lows. If something is showing higher highs and higher lows, chances are there's probably a greater than 50% chance that it's going to go for a higher high. Okay, as you can see, it's trying to do right now. So right off the bat, you have a bias. You could say, okay, well, as long as this structure is intact, it's reasonable to expect a higher low and a higher high. Now, in that same regard, if you're looking at levels and you're identifying levels as the market changes, okay, cool. Thanks, Alex. As the market changes, you want to adjust your levels. And to give you some more context, when we have a bullish market, higher low, higher high, right? And forget all the news and all that other nonsense and that people's opinions about the bullish market. The structure determines the trend and the momentum, not what people say. This structure is factual. It's clearly bullish, right? So no argument there. In that context, supports should hold, as we know, right? My students can tell you that. So it's reasonable to expect supports to hold. We have a support here at 35K. Now, I arrived at that support because I'm looking at these old resistance levels, right? And there's clearly a number of touches there. So that makes this area relevant. On top of that, the market proved, because I had that level identified before we touched it, right? Before this 35K touch, I had it identified. Look at my chart from TradingView 2 weeks ago. All right. So it proved, the level was proven, and it had this nutty spike right into resistance, and that was it. We haven't touched this 35K again, right, since we've worked our way a little higher. Here's my point: assigning probabilities. This 35K support, there's a higher probability that price retests. If price retests it, that there is likely buying that will step in, and your chances of a positive outcome are greater. Does that make sense to you guys? So this is very valuable to know in advance. Forget where Bitcoin is right now. It's irrelevant. What we're looking for is if the market can provide this opportunity for us, we are now prepared. That's called anticipating. So if we get that test of this 35K and we get a bullish confirmation, it would make sense to take a swing trade long, or even day trades. You can go for day trades in this area, right? How does this context help? I'm looking at a daily chart here. If we looked at a 4-hour chart, right? Or maybe you use a 1 hour chart, or maybe you use 15 minutes, right, for your day trades, and you're fooling around in this location, right? And you happen to be on a 15-minute chart, you should know from the context of the chart that you should not be looking for shorts at that location, even though your oscillators will be telling you to go short, your fake gurus will be telling you to go short, but the market says that that's a low probability location for shorts. You assign this yourself. Now, I can't come up with statistical probabilities like, there's a 95% chance of this or that. I can't do that. But I'm willing to guess that there is a greater than 50% chance that we attempt to bounce off of this support. So I'm preparing, right? I have this thought in advance. If the market produces this look that I drew here, this illustration, then that is what my expectation becomes. Does that make sense? Let me know. Yes or no? So there's a higher, it's reasonable to expect a higher probability of support, of a bullish reversal at the support level, because the general structure is bullish. Now, at the same time, what about resistance? Right now, price is at resistance. All right, you see this? So based on everything I just said, that should mean that there's a lower probability that price breaks through the resistance. It's a lower probability for longs, right? At this level, you should not be taking longs, especially at especially for swing trades at this level. It's low probability. This is very similar to when you play poker. If you don't play poker, let me just explain real quick. If you get two cards, right, at the beginning of the hand, and they're two lousy cards, right? They don't connect or anything. They're not, they're off suit and they're not connecting cards, right? They're just lousy cards. You typically don't play that hand because it has a low probability of paying out, compared to you start out with two aces, right? Which is the highest possible hand, the highest value hand you can begin with. It doesn't guarantee you will win, but it's a higher probability that if you go all in with those two aces before the flop, chances are everyone will fold, and chances are you're going to win. Not maybe a lot of money, right? It depends on the situation, but there's a better chance that you have a stronger hand. You understand that? That's the same idea here, where there's a better probability that this thing bounces for a long because the structure favors longs, compared to buying up here, which is a low probability for longs. Now, you may say, well, okay, if this is a low probability for longs, then it should be a higher probability for shorts. That's applying logic, right? But again, that's flawed, because markets are not rational. They are irrational, typically, right? In these situations, participants can push this thing higher. There's just a lower chance. So shorting this thing is a bad idea because this structure doesn't support shorts, okay? It doesn't support shorts. So like, for example, let's say I told you that there was a 90% chance that this thing pulls back, okay? And there's a 10% chance that this thing breaks through. You'll say, okay, well, now some people would probably still take the long because, I mean, they like to gamble. Hey, 10% is better than zero, right? But you may say the opposite. Oh, if there's a 90% chance that this thing pulls back, I'll take that. Okay, great. But there's no way to know. I can't measure if there's a 90% chance, right? It's probably more likely, the actual probability is probably something like there's a 55% chance that this thing fails and a 45% chance that this thing breaks through, okay? Which is almost random, right? It's just a little bit slightly off of random. Does that make sense? So that's what I mean. To make this simple, I may sound very complicated now. Don't get confused. Simply don't go against the bigger picture, right? Or if you do, understand that your expectations should be low. So let me ask you guys a question. Here's the interactive part. Let me ask you guys a question. Let's see who's been paying attention. If I'm going to go short here, I'm not saying short is wrong. I'm just saying it's lower probability. If I'm going to go short because we have a resistance here, and there should be a lower chance that this thing follows through and a greater chance that it pulls back at some level, how should I go about going short? Should it be a day trade? Should it be a swing trade? Or should it be like a longer term trade, like an investment type thing? I want to see some answers on that. So I'll repeat that. If I'm going to go short here at this level, should it be a day trade? Should it be a swing trade? Or should it be something longer, like an investment? You normally wouldn't invest on the short side of things. That's usually not a good idea in general. Who wants to answer that? And don't feel bad. Hans says day trade. Hey, Isaac, how are you? Can you take a look at H20? Sure. All right. Cool. Day trade, Kai says. Okay. Good answers. Now, can you guys tell me why? Can you explain why a day trade would be better? Let's see who's paying attention. This is a very valuable lesson, by the way. Even if you don't day trade. Why is a day trade short better here? And let's go to a smaller time frame. Let's go to a 4-hour. Why would this be a better idea to day trade here? Kai says short trade as current trend is against shorts. Okay. Babysitting day trade. Okay. That's an interesting answer, Kai. Why is a day trade better? It's actually a very simple answer I'm looking for. Hey, Steen, smaller expectations. You're very close. That's not the exact words, though, but you're very close. Steen is very close. By the way, now that Steen is here, I want to mention the technology that we have with the trade bot, by the way, the trade scanner is really a result of all of Steen's hard work because he really helped me bring this thing to the level that it's at. So if you want to thank Steen, do me a favor. There's links in the description if you're looking for another exchange like Bybit or MEXC. Okay, and you open an account there and you deposit funds and you place trades, Steen gets a small commission. And that goes a long way to, toward helping the community because all of his work is what made the experience for everyone better, even the free people. All right, because now we have Trade of the Week that works the way it works. That's all of his work. He helped me with that, and I can't thank him enough. So if you want to help out the community, it goes a long way. Consider clicking on those links. They're both in my signature and in the description here. Okay. Thanks, Steen, for putting the Dodgy coin. Cool. Because we're going to talk about that here in a moment. So back to day trades, right? Shorter time frame, less possibility. Okay, so let me give you guys the answer. Good answers. Good answers. You guys are almost there. Lower risk. It's that simple. Okay. Lower risk. Why is it lower risk? Because on a day trade, my stop should be a lot tighter than on a swing trade, and especially on anything longer time frame than that. My day trade stop is going to be very small, relatively speaking. So if I'm wrong, I go against the trend and I'm wrong, and this thing spikes, right? Because some stupid news comes out and this thing just goes vertical. I lose a small amount of money. Okay. And that's the whole point. That if there's any skill in this game, that's really part of it, is knowing how to take risk, right? Now, even with the signals that we send out, I even put a risk suggestion for the premium people that receive the premium signals. I put the industry standard is 2%. You really should not be risking more than 2% of your account per trade for these type of things. And 2%, in my opinion, is a little high. I personally only work with 1%. Usually when I send out like my personal trades or I take my own trades, I typically only look to risk 1%. Anyway, just wanted to throw that in there. So that's why you would choose a day trade. Now, so you guys answered, you guys have the right idea. Now, if price pulled back into this support level, okay, and we got the scenario that I outlined here that we are prepared for, is that better for a day trade, a swing trade, or a longer time frame trade? What would you guys say to that? Okay, so forget resistance. Let's say we pull back to support and we get the confirmation. Keep in mind, support level is not enough. We need confirmation. That's where like something like the bot shines, because the bot, that's all it looks for. Once the other criteria is met, it looks for a confirmation. It's nice to have the robot do that because there's no second guessing. There's a lot of, I really solved an important retail trader problem with the trade scanner, right? Minimizing you from the equation, knowing where to put your stop and take profit, and reducing your learning curve to basically nothing. Like those are some pretty significant problems, solutions to your problems. I hope you guys can see that. All right. So you guys say swing trade. Portfolio managing. No, Han, that's a little, I mean, you can. It is a support level, but it's still, that's not the greatest level for, I like much more, this 35K, I don't consider a major level. I consider it a minor level. 30K to 32K is more like portfolio manager or dollar cost average level. 25K, 20K, those levels are like dollar cost average levels. All right, in my opinion. But yeah, swing trade. Why swing trade? Because this is where probability is in our favor, because it aligns with the bigger picture trend. It's not that hard, right? It's some pretty simple concepts, but it's amazing. People just don't see that because they're confused by so much other stuff, right? Wait for the support level. It's higher probability. Now, the thing is, people suffer from this fear of missing out. We may not get back to that support level. I believe we will, but what if we don't? What if we break out first? What if we do this and you go, oh, this thing's going to run the 50K without me? And then you watch all your favorite fake gurus and they're all telling you it's going to 100K by next month. You better pile in now because it's just getting started, right? So they instigate, they provoke your fear even more, and they cause you to make mistakes because it's you basically being, succumbing to that fear. Don't feel that way. You're not going to miss anything. Their markets always pull back, maybe not to where we want them to pull back, but they do offer other opportunities, right? It's just a matter of recognizing them. So those are pretty much the points I wanted to make here as far as knowing your levels and assigning a probability. So right now, just to give you a quick recap before we get into Dogecoin over here, right? We know that at a resistance, it's a bad place for longs. So you don't chase this, you don't get all excited. And if you want to go short, which is aggressive, which I think someone mentioned here, Kai may have mentioned that, right? It's aggressive, to have low expectations, and you're going to day trade so that your stop is very tight. If it breaks higher, you take a small loss and you're out of this thing's way, right? A very common mistake in these situations is people have an opinion. Oh, those things are short. There's a resistance, double top. And they get all big, okay? And then it does something stupid because markets are irrational. Next thing you see a spike like that because some news comes out and now you're caught, okay? And you want to avoid that. So this game is about risk, not about reward, especially at the retail trader level. That's the only thing you can control in this game. There's a thing called game of chance and game of skill, right? People like to think that the market is a game of skill, but it's really not. A game of skill is a game where you have some sort of control over the outcome. Poker is a game of skill. Why? Because you can fool people out of their hands and win with garbage cards if you know how to bluff. That's a skill, right? So that's a game of skill. Other games like slot machine, for example, that's a game of chance. You have absolutely no control over that outcome. You just feed money in and you hope you win some money out. There's nothing you can't press the button a certain way for you to win, right? With the markets, it's very similar. We don't have control over the positive outcome. We do have control over the loss, the risk. That is what we control, not the profits. So you can call it a semi-game of skill in that sense, right? So that's really what you want to get good at. Defense, not offense. We have to play a good defense in this game because we have so much working against us. I'm going to put stuff together soon, content that really talks about what we have to face as retail traders and why you can't win in this game without, especially in the future, without automation. You're wasting your time, to be honest. As a trader, you might as well just give up now and become an investor, right? And you say, well, what's wrong with being an investor? There's nothing wrong with it. But if you still don't understand markets and where to take your money as an investor, you're just going to always be at the mercy of the market. And you're always going to give back the money when the market turns because you're not going to recognize the turn. All right. So enough of that. I talk a lot. Let me see what some of the people are saying here. Okay. Then it will be a long confirmation. Okay. You got it. All right. Alex, flip. Okay. What is that? Flip resistance to support, right? That can happen when you break a resistance. All right, cool. All right, you guys are on the same page. All right, cool. All right, good answers, guys. Good answers. Now, let's talk about Dogecoin. All right, let's go to Dogecoin here real quick. Oh, wait, hold on. Before I do that, you should always check should always check this chart here. This is the 10-year note futures, right? Should always check, see what's going on here, because this kind of gives you a glimpse of what the market is thinking in a lot of ways, we're still at a resistance. All right. I talked about a week earlier, we had this higher low and the structure may be changing, right? I pointed that out. We still can't confirm that, all right? It's still kind of struggling here. We'll probably know over the next few weeks or month. If this thing starts to form a bullish structure, we have the beginnings of a bullish structure, but this is still, this is still too early to judge as a bullish structure overall when it comes to the overall trend, right? The overall trend is bearish. Look at this, right? This is the weekly chart on the 10-year note futures. So this can easily develop into a lower high and we can see a lower low. That would be bearish for everything else, typically, right? Because rates would be going back to their highs and blah, blah, blah. And as we know, high rates are bad for everyone and everything. But if this thing starts to formulate, a higher low over time and we start to get a bullish structure, and we eventually take out this high here, then we have a friendlier market for investors. That's when we could probably see a more forgiving market and where any moron and their cousin can make money because the market just goes their way, right? Because when rates come off, rates go lower, it usually leads to easier markets, right? Because people have more money is cheaper to borrow and all that stuff. And eventually it reaches the common guy and they put the money in the market. I'm not going to explain that whole process, but learn the business cycle. All right. Anyway, let's take a look at Dogecoin. And thanks, Stian, for sharing that. So Dogecoin was a trade of the week, okay? That was called yesterday. Let's see how this thing's doing. Now, keep in mind, it wasn't stopped out when I looked at it before. Let's see how it's doing right now. So I'm going to type it into the channel here, into YouTube, so I can, because I can't show it from TradingView. I can't show that on my screen here. So for Dogecoin, the entry price, Doge, or actually, it'd be easier if you can, Stian, can you put it in the YouTube channel? Can you just put that trade in the YouTube channel? Or maybe I can type it in. Hold on. I'll put the prices, right? So the long, right? It was a long, and the price was, what was that? 0784, right? 0.0784. All right, so it's just hard for me to see. 0784, okay? And the take profit, the stop was what? 0719. Okay, 0719. And the take profit is 0882. Okay, now this was called, this was called yesterday by the trade scanner, right? Those are the numbers for Dogecoin, right? So let's just put those numbers on the chart here. First of all, where are we at? 0791. So this thing's about to be stopped out, right? 0719. Is that correct? 0719. Okay, right. Well, we're still, actually, we're not exactly on that stop. The low was 0789. So we have a little room to play with, right? Let's put the stop on the chart. So 0719 is here. That's 0719, is that right? Yeah, base, that's 0720. All right, that's the price. Okay. Oh, this is no, hold on a second. Let me go to a 4-hour chart. All right, then here's the purpose of this exercise. I want you to see basically the context around the trade scanner call, right? If you can see the context, you can better judge the signal. There are times when the signal is clearly a low probability signal, but the robot can't see that. So if you can see it, you'll be like, oh, why am I going to take this? Right? When it's a low probability signal. Other times you may see a higher probability signal. So it can help you select the signals better, right? Hey, Will, good to see you. So, and I'm going to have more training about that once I revamp my training program. But one nice thing about the trade scanner is it frees you up from all the gimmicks and all the nonsense and getting caught up in all the charting nonsense. And it helps you focus in on the context, the bigger picture, which is where you should begin with, is the bigger picture and looking at context, right? So let's take a look again. 0719. It's right here, right? That's the stop. Now, correct me if I'm wrong, Stian. That's where the robot placed the stop. Okay. Then we have the entry, which was what price I see here, 0784. So we're just above that right now. We're at 0795. Okay. So 0784 is right there. Okay. So basically, and again, this was called yesterday, people. And let's see the take profit. Where's the take profit on this thing? 0882. Where is that? 0882 is up here. You see that? That's the trade scanner. That is the trade idea that it shared yesterday with all the people that are on the list. Okay? All the people that are on the trade of the week list. It's free. This is the trade. And it called it long, I guess fooling around in this area here. Now let's look at the context of this. And does it make sense? Well, let's see what we can see here. Well, generally, one thing, Bitcoin is generally long, right? So that's going to be a positive for this because they all follow each other. Okay, so that makes sense. Let's see what kind of levels we have here, right? There is basically some kind of support level here, right? We have an old resistance back here, right? And as we can see here, let me just draw a little range in this area. This is basically a supportive area. It's an old resistance. It broke above it, and it's kind of tested, right? You see this? It attempted to break higher previously, and it retested the area. In terms of the trade scanner calling along here, it's not bad. It's not a bad idea. It's not like it's calling along up here, which would, as you could see after the fact, but we're not at a peak, okay? Now, we do have this lower high, which could be a little concerning. But the general trend, let's go to a weekly chart. This is a 4-hour. Let's just take a look at a weekly chart, okay? The general trend or momentum, yeah, we're near highs on the weekly, but this momentum is meaningful. Let's look at the the daily. Because again, what we want to see here is the recent structure, okay? This recent structure, higher lows, higher highs. And we have this on the daily chart, you could see we've basically pulled back, right, into this support, which we evaluated all that on the 4-hour chart. So on a couple of time frames here, this trade makes sense. It's in line with what the market is doing. The robot is not shorting into a support. It's not buying into a resistance, right? Sometimes it'll do that. It'll short into a supportive area, right? Like for example, if Dogecoin breaks to here and then the trade scanner starts calling shorts, we have to look at, this is a pretty significant support area, right? So you want to be careful with those. Although the momentum may follow through, we have to look at some other factors. My point is, this structure is in line with that call. It doesn't guarantee that it'll work, but the thing is, it's not a ridiculous trade. Like, it's pretty clear, okay, I'm buying the pullback, right? And that's what the trade scanner looks to do. Does that make sense to everyone? Does that make sense to you guys? I want you to understand, what it is that you're dealing with. Paper trade this. You could still get in on this trade because we're at what, 0795. The trade was called at 0785, okay, or 84. So paper trade. This candle doesn't look that good, but it's not closed yet, right? And the 4-hour looks a little bit better than this. I mean, the 4-hour got this little pullback. If this candle turns green, right, and get some strength out of Bitcoin, this can do that, right, which would be a great sign. Paper trade. Go on the TradingView platform and put it on paper. See how it goes. Risk 2% of the account. If it's a $100,000 account, you're risking $2,000. If the trade works out, you make $3,000, right? If you're working with a $100,000 account, do the proportions, do the math. If you're working with a $10,000 account, you're going to risk $200 to make $300. Does that make sense? Because this reward risk is 1.5 to 1. That's automatically programmed into every trade. That's another great advantage to something like this, is you don't have to guess. It's automatically programmed. So the trade scanner gives you these numbers at the time of the entry. All right. So again, any questions about that? Because that's how all the trades are basically set up for takes the same trades for the same reasons every single time. All right. Any questions about that? Okay, cool. So guys, again, it's a holiday week. So if you're interested in the yearly packages, make sure you're on the list. The link is in the description. I'm going to send out the coupon by Wednesday. and you'll get some more savings on the yearly package. Now, keep something in mind. Speaking of context, Bitcoin, if Bitcoin comes off of this resistance, Dogecoin may have a problem. So you can kind of use this as a guide as well. So, Dogecoin was called long, Bitcoin is stuck at this resistance. If Bitcoin can't clear this, that thing may get stopped out, right? Because there's a tendency to follow each other. Not all the time, but just something to keep in mind. Maybe when you see something like that, you say, okay, you know what? I'm not going to risk 2%. I'm going to risk 1%. Maybe I'm going to risk less, maybe 0.5%, because I don't like this Bitcoin situation. You can make that decision, but that's usually a little more advanced. Okay, cool. Han, you're on the list? Cool. Okay, cool. All right, cool. Yeah, Han, you're a yearly guy, so you're a member. You're a member, and for my members, my active investors, I have a special coupon for you guys when it comes time to renew. But because you guys really had to put up with a lot over the year. You guys believed in me a year ago before I had the trade scanner. So I have a special coupon for you guys. All right, so Alex, can you take a look at H20? Oh, by the way, real quick, I know I'm talking a lot today. TradingView came out with their own coin. I got an email yesterday. It's called Trade. Want to take a look at that real quick? I don't know if it's in the system. All right, first let me take a look at Alex's here. Would you pay? It's going higher. H20. It's Romania's BVB stock. H20. Okay, what is that? Do I have the right symbol here? Okay, I'm not sure what that is. Is this correct? Let me know. Okay. Hold on, just going back here. I got it too. Was wondering if it was legit coin or scam. Oh, the trade thing. Yeah, I mean, obviously it came from TradingView. So let's see. Let's just check that out real quick. Trade USD. It's on Bitfinex. It's on KuCoin. Is that right? No. Polytrade, Tradewell. Is this the TradeView one? On Bitfinex? It can't be. That can't be it. Is that it? 34 cents this thing's worth? Let's go here. Is that right? It's worth 34 cents? Man, because I think they gave me some. I don't know. If I have some and I see the chart looks like this, you better believe I'm going to dump it on you guys. I'm definitely going to get rid of that. No, I'm joking. Oh, it was a scam? Oh, that's interesting. I got like 3 emails from them. Oh, thanks, Stian. And I'm like, I believed it. All right, they tricked me. I guess I won't be dumping this on you guys now. All right. I mean, I got emails from them. It looked like it had their logo on it and everything. I'm like, oh, they came out with their own coin. What are they going to do with that? Okay, cool. So no dumping. That's interesting. Yeah, I thought I was going to have some new coins there. All right, never mind. So back to reality. Anyway, all right. So you guys have any questions? What's that H20 thing, Alex? H2O, like the water formula. Okay, so H20, H2O. But is this Ho Leong? Is that it? That's like on the. I don't know. That exchange doesn't look right. Here, is this it over here? No, that's not it. I don't know. I don't think I'm getting the right symbol. On BVB, H2O. I don't have BVB here. I have SGX. I don't have the exchange. Do I have to click on stocks or something? Yeah, I don't have it. Okay. O like silver. Oh, H. Oh, I got you. O as in O. BVB. Here it is. Okay, here we go. All right. Thanks for getting me on the same page. I'll go over this. I mean, Alex has been a long time follower. He's a moderator. I'll take a look at this real quick. Okay, yes, the site that was in the mail only worked to link your wallet. Oh, well, thanks for pointing that out, Steen. Here, this is what Steen says about that trade coin. I had no idea it was a scam. Thanks for letting me know. It would have been nice if TradingView came out and said right away, hey, by the way, people, this is a scam. They should have sent an email. All right, anyway. So let's take a look here at this H2O because Alex asked about it. And Alex wants to know, do we think it's going higher or lower? Well, let's go to a weekly chart. Okay, it's the first thing I like to do. Obviously, there's not a lot of data on this thing. Nice wave count, nice wave structure, right? 1, 2, 3, 4. Looks like you're in this fifth wave. That's very easy to see. So if this support stays intact, right, I would expect it's reasonable. After everything we've gone through here today, I would think it's reasonable to expect a higher high. Okay, I would expect a higher high in that regard. If it fails to make the higher high, then you're likely in a consolidation. But it's reasonable to expect that one push higher. That would be your wave 5. And then after that, if you can count 5 subwaves in that wave, then you could probably anticipate a broader retrace. Does that make sense? But I mean, this is a nice wave. Wave 4s typically look like this too. They're usually like more elongated consolidations, like typically, especially if the wave 2 is sharp. Does that make sense? Okay, cool. It's Romania's bigger IPO. Interesting. Yeah, so I mean, it looks decent. It looks like it has some room to go higher. The key thing is this, Alex. If this support breaks, if that support breaks, then you probably, look for a failed low area here to see maybe the consolidation stays intact, right? Otherwise, if the support breaks and it keeps going, then I would just stay away from this thing until it could prove some other type of stability. Does that make sense? Otherwise, it's reasonable to expect this support to hold, and it's reasonable to expect that resistance to be cleared. By how much, there's no way to know, as we know, because we can't forecast that far into the future. Does that make sense? Okay, so anyway, thanks for asking. Good question. All right, you guys. So again, Alex has been a long time follower, and he contributes. He's one of my moderators. Okay, cool. I think I got everyone else's stuff here. All right. Cool. All right, you guys. So if I don't have any other questions, again, we have the holiday. There's a holiday this week for the U.S. Expect things to go slow going into it. Take day trades if you're unsure, or just stay out. There's nothing wrong with staying out during a holiday week. Volume typically gets smaller and smaller, and things can get erratic. Now, let me just say one thing. I've seen this. I've been involved in this game for almost 25 years. Okay. I remember 25 years ago or 24 years ago, whatever. I remember going into the office on the Friday after Thanksgiving. All right. And it's always the same story. You're likely to get a slow grind. It could be completely irrational, where it just drifts or grinds one way senselessly, right? With no volume. You say, how can this be? There's no volume. Don't waste your time. Friday, I believe, is a half day as well. I believe it's a half day in terms of market hours for the US. So don't get mixed up in it. You have better things to do. Take a break, do practice trades or something. If you have to do it on paper, just don't get involved. It's not worth it. All right. Wait until Monday. That's when things usually pick up again. All right. I've seen this over and over and over and over. Don't be fooled. Avoid is usually the best thing. All right. So, okay. So I answered that. All right, you guys. All right, cool. Thanks for confirming, Kai. Yeah. So again, please take that advice, because I've seen it so many times. All right. So other than that, and that can affect Bitcoin too, not just the S&P, not just the NASDAQ, not just stocks. It can affect everything, because volume just gets smaller, and primarily you're going to be against algos, because when everyone's stuffing their faces with their retail holiday nonsense, the algos are not stuffing their faces. They're still in the markets, right? So you're up pretty much against algos anyway, but that's when you really have no chance, right? When it's all algo. It's like a tight poker table. I know I've been a lot of poker analogies today. All right, you guys. So for those in the US, enjoy your holiday. Don't eat too much and all that other stuff, because it makes you complacent. Those who are not in the US, enjoy the slower time, however you can. All right, you guys. So thanks for watching. If you have any questions, you know where to find me. Hey, thanks. Yeah, press the like button, press the subscribe button. It's always helpful to me. Press the boost button over there on TradingView, and that always helps. I do have a lot of content coming. It's going to take me some time to get to it because obviously I've been busy with the new website, getting that going, and that's taken a lot of time. All right, but I really work very hard, Steen, as well, to provide the best possible experience for you. So do me a favor, check it out at least. Paper trade, see what you think. All right, so again, thank you all. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.